Good morning, everyone. I hope it is a good morning, an okay morning, a better than terrible morning. Been some pretty crazy events over the weekend. Things seem to be fine now, but I hope that the events of the weekend have not left people too wrecked, too disheartened, too fallen in some capacity. We're going to be going through all of it, our thoughts, our reactions, and our thoughts for like what's coming next and how to plan. So we've got a big show today. We're going to be discussing everything to do with the modern market, which is the crypto market, the NFT market, and whatever the hell happened over the weekend. Loaded up for discussion today. We've got the market turnaround to the upside after the biggest crypto liquidation event in history. And then Trump saying that we don't need to worry about China. It will all be fine. A bit of the liquidation at least started on Trump's news that we did have to be worried about China. Thought he was going to be putting 100% tariffs on them. In actual fact, if you do a little bit of investigation, there was some other stuff going on exchanges which were at least perceived to be as responsible, or really the main cause for some of the things going wrong on chain and all of the liquidations we saw. So we'll break that down in just a little bit. We also got Binance now today announcing it will cover $283 million in user losses, maybe accepting some responsibility for that. BNB is back to an all-time high today, although it did dip at the time. It's up 10% to $1,344. The 4 meme on BSC is up 50% to 180 mil FDV. And then finally, when we get towards the end of the show, get to start to kind of make sense of what's moving, what else is interesting and new moving forward out of this mess. Hyperliquid announces network upgrade today in which HIP-3 will be enabled. That's going to be perps. Perpetual markets open for other people now for the first time to be able to deploy. So that is pretty exciting. We'll touch on that in a moment too. I'm delighted to say I've got Legendary and Bread in the co-host seats with me today. We cannot wait to get into it. But just a reminder, friends, before we do, nothing that we say here is financial advice. The market is very, very risky, as we all just experienced over the weekend. So please do proceed with caution and exercise your own judgment at all times. With that out of the way, Legendary, how you doing? How you feeling? It's Monday, it's the 13th of October. Straight question. How was the weekend for you? How did you experience the dip? How did that whole weekend play out for you?
GM Jim, doing quite well. It was what a weekend it was. I feel like it's gonna be even a mess to untangle everything that happened. Obviously, It was shocking to be in front of the screens and just see everything crash at an unprecedented speed and not having any idea of what's going on. And we'll get through all of that throughout the show. But personally, I'm doing fine. Actually managed to put on a couple of pretty nice trades. It didn't have any perp exposure other than a plasma short, because it did stop most of the perping a week ago or so. So I was in a lucky spot, to be honest. But yeah, it's been a mess this entire weekend, and now seeing the market recover that fast, like all I can do is really wait for the stock markets to open in 2 hours. I know it's Columbus Day in the States. I think it is. So I did look up if it's a trading day even, and it is a trading day. Stocks will be open. So stock markets will be open. Sorry for that. So I'm very, very interested to see the entire day play out.
Okay. So that's good. All things seem to be well from your perspective then. Brad, just on a personal level for you, how are you holding up after such a volatile weekend? How you doing, my man?
Say everything that Legendary just said, except you did get fucked up by the liquidations. And that was me. And not bad. Like the ones that I was playing in the perp plan got fucked up, obviously, like everyone else. Yeah, unfortunate. Still, like, we covered portfolio percentages late last week. So like it wasn't like everything gets wrecked. Like I said, 60% of my stuff in stocks, which also got hit by a lot of this stuff, but has recovered a little bit in after hours since then. And then on my perps exposure, which was probably about 5% of my portfolio, some of those were shorts. So like those things did well. And the ones that were long, unfortunately, like the worst part of this is because you can't anticipate, or you couldn't anticipate, that it would be something so dramatic. So me being the cautious perpetrator that I am, seeing things starting to bleed down a little bit, I go, I'm not going to sleep on this. I'm not going to assume it's just going to recover, and I am going to defend my position, and I'm going to feed it some collateral. So I even traded in a little bit more stables to give me some even more buffer to, like, whoops, got muted there, to stay away from what would be.
Oh, your mic's changed, Brad. I don't know what's happened.
Oh, I think let me see if I can switch it real quick.
And your camera froze as well.
So how about this?
Mic's good. Camera's still frozen.
Yeah, I'll figure that one out. But
yeah, keep going.
Yeah, but what happened was, like, so I fed it collateral to bring my liquidation levels down, and then obviously it just spiked through everything. So like I was going to be liquidated regardless of whatever I did. I could have quintupled my actual stuff, my collateral on the exchange, and it still would have spiked through everything, just because like no one was safe or something. I moved that dramatic. So I was always going to get liquidated, and I just fed it an extra, 2% of my exposure to try to defend it, which is unfortunate.
Yeah, I think that's definitely unfortunate. English here in the comments saying I got liquidated on 2x lev like everyone else. I think no matter what you did on the leverage side, like if you were long, whether it's isolated, whether it's cross margin, I mean, God, I don't know the specific details, but it makes me scared to think what would have happened to people's accounts if they didn't know the difference between isolated and cross margin. It seems like everything will have got taken from you. Basically, if you were long any number, basically, everything got taken from you.
I think this is why it's so important that we have this conversation on the show. Like, and Brett often also putting that in perspective, even during his like newly found trader arc, right? Yes, he's perping. Yes, it's fun, but that happens with a relatively small part of your portfolio, a couple percent. If that's gone, it sucks, but you are still in the same wealth category that you used to be before. And obviously, you said you tried to put on more collateral, but even that happened with like still a relatively small part of your net worth. You didn't go in putting in 50% of what you have just to try to have enough funding.
Some people would have, right?
Yeah, just chase the losses or chase the additional funding there. So I think this is why it was so important to always have put this into perspective when we talked about the trading, perping, all the degenerate things.
Yeah.
Which, to be fair, sorry, go.
Yeah, I'll just say what sucks. Like, I was having a really good week. I think like I was up probably like 40% of like my total capital that I had put in like over the last 7 days. Like I was crushing it. And then now I am down all the percents minus a single position that was short. So like that, like doing the pair trade of having, I talked about it. And actually someone tagged me over the weekend. Like they wish they had followed a similar tactic where I always had one long, one short going at any time, like something that I was bearish on at all times and something that I was like bullish on at all times. And that short saved me, even though a lot of people did get ADL'd out, which maybe we can talk about what that even is. But a lot of people had their shorts closed on them, which made it even more dramatic because some people running a pair trade. Yeah, Legendary is one of them.
Got closed.
So your short got closed automatically to preserve the liquidity of the actual exchange you were exchanging on, and then your long was naked open, and you lose everything. Right?
Will have got taken away from you. Yeah.
Right. It is brutal.
Yeah, that was one specific. Like as I started to search for some takeaways, which maybe you guys are going to do a little bit more in the middle and towards the end of the show. I can't be here for the full show today. I'll be here for another about half of it. Made you think there's I've been speaking about taking out some insurance the whole month, basically.
Yeah, I saw a lot of people tagging you. Yeah,
I've been talking about taking out some insurance. Like, look, we're at highs, guys. There's so much stupid stuff going on. I just want to take some out insurance here, just for like context of trying to draw all the things I've been saying together. I made this one post. I'm not tweeting that much anymore, to be honest. I feel fulfilled sharing my ideas on the show. But I tried to draw it together. Like, why did we get to that conclusion? And then the scary conclusion after that conclusion. So over the last few weeks, you know when people have kept saying on recently, like, oh, you can't predict this, blah 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 blah. I think that's the wrong question. It's not about trying to predict the specific way something goes wrong. It's about what I've said here. It's not possible to predict these things perfectly. It is possible, though, to notice increasingly ridiculous and dangerous things which are happening and start to bet that something which you cannot predict could happen soon. I think that is why I moved in the direction I was moving. Where it's like, look, I don't know what's going to happen. I'm not smart enough to know every single thing about ADL and how it operates and Binance's liquidation system. And like, I'm not a technical person. I don't know all of that stuff. I did see that everyone seemed to become a perps trader in the last few weeks. I did see that DATs were exhausted and there were no marginal buyer, and there were increasingly stupid DATs as well. And you did see this battle going on with CZ and Hyperliquid. Just like, do you want to get involved in the crossfires of this specific thing? Again, I don't know who's going to win. I don't know what tactics are going to be employed. I don't know so many things, but I feel like something is going to happen. And you know, as you said, you cannot predict these things perfectly. But the way that I would think about these things moving forward for people thinking about managing risk is not to predict the exact event and how it happens. Is more to think, right, what are the types of things that are happening now? What's the likelihood of something happening, which I may not be able to predict, to happen now? Is it more or less than before? And as that percentage keeps going up, then you start taking some kind of defensive precautions, whether that's selling to spot, whether it's moving more into gold and Bitcoin and stables. But having said all of that, one of the horrible conclusions coming out of this for me is like, there's no insurance here in that respect, or maybe the only insurance is spot. Okay, maybe it's not. So say I'd been talking about a short I had on with ETH for a long time. I really liked that short specifically. But as you say, like, I mean, fortunately I had no long exposure during when this stuff happened. But if I did
you get ADL'd out on the ETH short?
Yeah. So I got ADL'd out of the ETH short. So okay, I made some money there. And fortunately, I didn't get liquidated on anything because I wasn't long on anything at that specific time. But I have been perping in general here and there. So there could have been a world where I was. But the point is, it doesn't seem like with this specific system, you don't have that insurance, or that insurance is not what you think it should, what you think it is. And therefore, the only real insurance is spot stables, spot Bitcoin, spot gold, or whatever other asset you think is secure. So that's like the thinking that got me to where we were last week. And then just like that, the next conclusion after Ledge, you want to come in here?
Yeah. Just to the point of that insurance, I'm really curious to hear Brett's thoughts as well, because I know you dabbled with that type of instruments as well. If you wanted insurance, isn't then going back to options the way to ensure the potential downside? And obviously can't do it to that extent on chain, but not do that as a perp and go back to classical option trading if you want it purely for insurance.
You know, something that I was meaning to check in. So like, you're right. That is something that you can do. And options you can't get liquidated on options, right? Like, you might be wrong on your selection. You may ultimately get zero out of the thing, but you can't get liquidated on it, which makes me want to check out Derive. Derive is I think it was an L2 that was created by, I forget who, like, there's some lore there on like long-term builders that have been building this thing out, and they've been teased to be acquired by synthetics at one point. Kane had tried to do that, and the company that was acquired by Coinbase, Deribit, one of the previous founders of Deribit is actually a core contributor to Derive. So it's actually something that I've been wanting to check out to see if we have the ability to do that on chain, and do it with traditional options mechanics. But they're not as easy to, they're not as consumer friendly, I guess I'll say, in their current form.
That's a great point, actually, Ledge. I'm sure there's more sophisticated traders in the audience listening and being like, why don't you just do options? Do you know why? Because I don't know how. I've never learned how. I came into the space from NFTs. I've learned everything backwards, learned all about crypto backwards. And so, yeah, maybe options is the best way. But yeah, we don't seem particularly sophisticated in that side, right? We've gone straight to perps, and I think that's the best thing. And we are realizing that there is some severe severe downsides, at least in the current system and the way that it's built. Question
Yeah, I mean,
to
bro, pull up,
go on.
like, just so you guys get a look at this, pull up the screen and show it to the group so you can see like what look at this UI compared to Hyperliquid and tell me if you're going to have these meme coin trenchers, these broccoli head dudes coming in here and using this. No.
Yeah.
No
Then
shot.
maybe that's the point, right? That's the point. Like it's supposed to, not everything's supposed to be
up or down. Up or down, bro.
Yeah, this is why perps are so popular. I mean, you Brad traded options, so did I, but I was happy to have perps not care about the Greeks anymore and just be able to be like, I want to be up or I want to be down on where I think price is going, and I want to do that with leverage. And that's obviously a way easier way to do than, you know, having to read through all of that and understand this.
Yeah, and this is someone who does options. Like I even opened up some options in my TradFi account last week for like some leaps on 2028, you know, some pharmaceutical shit. Like, and even then it's just like, man, I'm kind of just clicking some buttons here. Like there's like, I'm pretty sure I get this, and they're getting it better because they say like what the price has to be versus whatever. But yeah, it's still just not as elegant for sure.
Yeah.
And B-check, it doesn't matter what you think, because like the world is going to kind of push towards abstracting all of the technical complexities of stuff and allowing people to gamble. So like you're right. Like maybe some of this stuff is probably a little too like degenerate / like risky for people. But you know what is going to continue to happen? Wallets like Rainbow are going to make nice, slick UIs where you can just deposit some money, click a nice button that has a really great transition into the next thing, and it's just going to take your money from you. It does not matter. Like this is where all of it's going to go because it makes money.
Agreed.
I agree to a point, but I think I think two things. One, perps won't just be allowed to operate in this way in Europe. I can't speak for the rest of the world and the regulation there.
Bro, they're not allowed to operate this way in America. Look, and I just lost X amount of dollars on this shit.
I know it doesn't matter, but like, I know it doesn't matter what happens in Europe, but as in like the regulations will be such that it won't be allowed. The gambling rules are just insane. They're going to crack down even harder if people are going to lose. But then maybe the more relevant point moving into the stuff that's what's happened, and maybe we'll just go to Funky first before Legendary just takes us through what happened, is I think there could foreseeably be class action lawsuits based on this, like on what happened over the weekend, like as Legendary is going to take us through, like something really, really, really wrong happened. Like
people killed themselves too.
Yeah, of course. So something really wrong happened. The consequences were so significant, and I don't think that can all be attributed to, okay, Trump came out on Friday and said we're going to do a bad deal with China. It's like that doesn't mean the stuff literally goes to zero and all the prices get messed up, and like something far more significant happened. Maybe Ledger's going to take us in that direction. Brad will be able to respond in a bit. I know he wants to right now. I won't be here for that part of the show. I'm gutted, but let's go to Funky first, get some reflections before we really get into some of the core details and discussion.
GM, Modern Market fam. First and foremost, B, I just want to say thank you. Very kind of you to reach out and check in with me over the weekend. Everything was good. I did not get liquidated. So I don't know. Maybe it's the power of the chain. Maybe just knew, don't touch this.
Divine protection.
BTC 10x long. Like, my liquidation point's literally 31K, which it's never going to reach, right? Yeah. But I'm still, when everybody said everybody got liquidated, I went in. It took me a while to log into Hyperliquid, but when I finally got there, I was like, oh, good, it's still open. Because I use the Alpha Bunda suite from Wick. If you guys ever see Zero Hedge, and I basically longed at 109 a couple weeks ago, and it was still there. And I even added more cash just to make sure that there would be the liquidation point was 31, still going. So I did not double down on my Tau, which was a big mistake. But yeah, I just wanted to say that I didn't get liquidated for some reason. And if you guys are interested in learning about options, because I used to day trade equities, if you ever wanted to learn B, there's a great series by Tastyworks, which is a very famous options trading platform here in the US. They have a YouTube series with Dr. Jeff that goes through everything, all the different weeks, what it mean, how it works. It's really good. yeah, tasty works.
You
like
have
it.
been option trading. Oxy has been option trading. Bread has been option trading. So have I. You need to make one show where we carve out a bit of time to go through the basics of option tradings. Maybe not in the mono market, maybe a separate thing, but I think that would be highly interesting to people.
And perfectly timed because I didn't get my coin calls taken away because I've been writing covered calls against my coin position to kind of DCA. And literally the strike was 360 and at close it was 357. So I get to write some more.
Right. That is that's pretty good. I think that would be super helpful. That's a good suggestion. What we're going to do now, the rest of the show, Ledger's going to take us through what specifically happened. Bread's going to get a chance to come in and discuss that. Talk a little bit about moving forward then. BNB ecosystem absolutely started ripping off the bat. Tau, as Funky just mentioned, moving as well. What's the aftermath and what's the outlook? That's the direction we're going to go. I'm going to have to drop off here, Ledge and everyone, but I'm going to try and join on audio for a little bit and see how that goes. Probably got another 20 minutes of me, but on audio. So Ledge, take it from here. I'll be back with you in a sec.
Alrighty, see ya. Let me adjust for the, there we go. Alrighty, let's start maybe with the easy part first and work through that, starting with the events of today and yesterday, because that is easier to explain than the liquidation that happened on Friday, and we'll definitely spend more time on that. So what happened, the most recent news is, and I just checked Truth Social, is Trump, who yesterday said, don't worry about China, it will be all fine. Highly respected President Xi just had a bad moment. He doesn't want depression for his country, and neither do I. The USA wants to help China, not hurt it. And that was in response to a post by the White House and another post by Trump on Friday on Truth Social, where he was saying, it has just been learned that China has taken an extraordinarily aggressive position on trade in sending an extremely hostile letter to the world stating that they were going to, effective November 1st, impose large-scale export controls on virtually every product they make, and some not even made by them. This affects all countries without exception and was obviously a plan devised by them years ago. It's absolutely unheard of in international trade and a moral disgrace in dealing with other nations. Based on that fact, China has taken this unprecedented position and speaking only for the USA and not other nations were similarly threatened starting November 1st, 2025 or sooner, depending on any further actions or changes taken by China, United States of America will impose a tariff of 100% on China over and above any tariff that they are currently paying. Also, on November 1st, we will impose export controls on any and all critical software. And this right there did trigger some, obviously, selling off, shocked the stock market, S&P 500, NASDAQ, everything was down. And there was also obviously initially a strong correction in crypto that we have seen. However, that was nothing unexpected, but a bit later, what happened is that a massive, unprecedented liquidation cascade was triggered. We had stats by CoinGlass, which I'm going to comment on in a second, that said in the past 24 hours, that was on the weekend, 1.6 million traders were liquidated. The total liquidations came in at $19.31 billion US. Largest single liquidation order happened on Hyperliquid ETH USDT, valued at $203 million. Obviously, many people spoke up on that figure and very correctly added that this is just what happened on chain. It does not include everything that happened on centralized exchanges, and they report in a different way. So it is expected that those liquidations were significantly higher than that. Most are speculating around $40 billion US. Some are going even higher. Absolutely impossible to name that number. And for those of you who have been watching the charts live on the weekend, especially the altcoin charts, it was very interesting to see, very shocking to see that some coins like Pump, like Arbitrum, basically went down to almost zero, went down to 10 cents.
Atom on Binance went to, what was it, 0.0001 cent, so fraction of a cent, and it's like $4 is the current price.
Exactly. What also happened on Binance, and I'm going to get into that bit as well, is that USDe, Ethena's algorithmic stablecoin, went to 65 cents, while Everywhere else, it was maintaining 90 cents. So there was like a massive pricing issue and a massive pricing discrepancy that happened on Binance compared to other trading venues, compared to on-chain prices, which also exacerbated that situation. And I'm gonna pull up an article in a couple seconds that tries to explain a bit of what has happened, but I do want to preface it with we simply don't have all the information at this moment in time. So while it reads sophisticated and explains some of the things that happened really well, we cannot have absolute clarity on everything that happened over the weekend, but we'll try our best to make sense of that. And this article was shared by YQ with the title was "The Friday Crash: A Coordinated Attack," and pointing out, I'm not going to read all of that because it's way too long, but it's pointing out a couple of things that YQ found suspicious. The first of which, he calls it the most puzzling aspect of the crash, centers on 3 specific assets that experienced catastrophic price collapses, but only on Binance. The first of which is USDe. We just mentioned that it went to 65 cents while maintaining 90 cents everywhere else. The other one is wrapped BETH, which crashed to $430, which is almost 90% under ETH's value. Again, that on Binance alone. And the other one is BNSol, which also plummeted to $34, while other exchanges did not see that movement. And why is this interesting, especially for these assets? The point that YQ is making is that on October 6th, Binance had announced updates to the pricing mechanisms. For these exact 3 assets scheduled for October 14th. The crash occurred on October 10th to October 11th, precisely within this vulnerability window. Again, this mostly also concerns the Binance ETH, the liquid Binance staked ETH and the liquid Binance staked SOL with these weird appearing token tickers. And then there's like also a recap of what had happened on Friday. So as we said, markets began declining after tariff news, normal behavior. Then 20 minutes later, altcoin liquidations started to accelerate dramatically, possibly targeting market maker positions. And then 20 minutes after that, USDe, wrapped Binance ETH, wrapped Binance Liquid Stake SOL, whatever the exact explanation of that ticker is, simultaneously collapsed on Binance. And then another 15 minutes later, the complete market had a structural breakdown with all the moves that we've seen, including Bitcoin almost going down to 100K and triggering that entire liquidation cascade with that critical depeg event of USDe happening 20 minutes after the first liquidation. And then 10 minutes after that, there was this complete structural breakdown of the market. At that point in time, we already have seen that liquidations had surpassed 10 figures, had crossed $10 billion. You can also see on screen, for those watching on YouTube or on Spaces video, the USDe USDT chart. And this basically massive breakdown and then recovery lasted for a bit more than 20 minutes. While at the same time, and I'm going to pause here for a bit because there's so much more to unpack, and I want to come to you as well, Brad. While at the same time, we obviously had an unprecedented spike in gas fees on ETH. While I was checking in, all the gas trackers broke down. Getting a transaction through was like half an ETH for me, like $2,000 to do that. Wallet infrastructure was struggling to work for me personally. Rabby broke down. I had to fall back to MetaMask. Where, shout out to MetaMask. I don't often say positive things about that wallet anymore, but it did work. Hyperliquid obviously struggled with that massive traffic, but handled the things as it is supposed to handle it, and that includes the auto deleveraging of positions, which many people weren't aware of how this exactly works. To be completely honest, including myself, I had no idea about that, which is again a result that I'm not perping with a ton of my portfolio, not worth a ton of my size. And then other trading places like Aster or other perp exchanges had even more structural breakdowns, and they were not able to process liquidations in an orderly way, or simply the liquidation engines did break down. Again, there's so much more to say on this, and we'll talk probably for the rest of the show about that. But I'm gonna pause here for a second and go to you, Brett, to hear from your perspective and your views on that.
Yeah. Yeah, there's obviously, we could talk hours on this stuff because there's a lot of theories going around. I think you covered pretty well some of the structural stuff. On top of it, there's the crimey stuff that everyone's trying to speculate on, and whether or not like the wallet that came in and did the massive shorts on ETH and BTC had any kind of coordination with the Trump admin and the tweet. And because like it just like looked serendipitous with the timing, literally minutes before, massive size. I think though I've evolved to think that the that particular player is not actually a sophisticated one or connected to Trump. And I say that as I read over the weekend, apparently a lot of this stuff was forecasted a little bit. If you were from the East, the Chinese government coming out and issuing statements on the earth metals and how they're going to position themselves actually came out several days before Trump actually reacted. So it's not inconceivable to me. And I'm very much a believer of Occam's razor, which is like, it's often the simplest explanation to these things, where this person, it saw the news coming out from Xi and said, okay, Trump is going to respond. He's probably going to be volatile with his response, and it's probably going to nuke the markets for a second. So he came in and put on 2 large shorts over the course of a few days. Just happened to hit it a couple minutes before the Trump announcement, which obviously added to some of the fire, but that that in and of itself would not cause this, right? Like James Wynn came out and put on trades of large size, reaching $1 billion in some of those positions, and that didn't actually impact the market positively or negatively. Outside of like the commotion that started, it did not create a cascading outcome of liquidating the shorts, liquidating the longs, anything. Right? That would have to be something more targeted, where, as you pointed out, there was a lot of suspect things coming out of the Binance venue specifically. Whether or not like CZ is an evil mastermind and was propping up all this stuff, people had speculated that, oh, knowing USDe would be especially vulnerable in this situation based on how it's handled. Like they integrated USDe a few weeks ago. And then also we were going to modify those 3 assets that they could pinpoint, and also prop up Aster, which gets all the people on the ecosystem spinning up longs and getting into position that would ultimately lead to a more volatile outcome of an attack, and then like nuking the charts. Like, man, like that, there's just a lot going on there. Maybe that's how you get to be one of the most wealthy people in the world. I don't know. It's just not my thing. All I know is that I'm starting to think of like what we do from here and how the market is going to behave. We've talked already about people killing themselves because they managed a lot of funds. I know one report over the weekend was a person who was a large hedge fund manager out of Ukraine, right? And he managed the funds of government officials and military leaders and upwards of like, I think it was like $80-something million. And then he got liquidated, and they found him dead in his supercar, because I'm assuming he probably realized he lost the money of these very powerful people in the country that he was in, and that was the best outcome for him. It's unfortunate, but like he is not the only one that is going to be in a situation where he lost a lot of money that was given to him, probably by friends, family, whatever, a company or accomplices, not accomplices, but confidants, whatever. So like there will be other people that float to the surface, market makers, whatever. Yeah, I don't like where we're at right now. I put on a long position over the weekend. Actually, I put on a short initially after this, thinking these bodies would continue to float to the surface. That actually played out really well, and I was doing great up until yesterday, where a random tweet from Trump shot the markets back into recovery mode. So I had a stop loss there to make sure I at least got out at par. So I came out unscathed there, but I was up 50% in my position, doing well. And I just don't like that right now there is no structural defense to any decision that you make, right? Like now everything shot back up. We recovered. We got up to 116 on Bitcoin. Had you put on a long there because Trump is signaling good things? Well, he just got online again, and he's now talking in a press conference, and market just tanked down to, just above 13.5. So it's like, okay, like if everything's hinging on just every word that this person says, you cannot make a decision that is anticipating anything. So I am right now sitting on my one short that survived the actual crash. I'm just going to let that thing do its thing, and I'm going to wait for more structural stability that I can actually anticipate and actually start building positions on. Because like right now, it's all hinging on Trump's tweets, which, as we've all seen over the last few years, is just not something you can anticipate and or deal with.
Yeah, that is a fantastic point. That's definitely something I also wanted to get into for today's show. Then I'm also going to go to Oxy, who has his hand up, but I want to respond to you first, Brad, with pulling up. There you go. This chart, S&P 500, down 3% on Friday, but that is exactly to your point. Pre-markets, while on CNN they are currently in fear mode, are up 76 base points. S&P 500 is up a bit more than 1%. Nasdaq is up 1.5% on the pre-market. So I am very much of that similar mind as you are. Also, gold, by the way, is pumping almost up to 4.1K, another 1.5%. That I don't want to put on any sort of significant trade until we see the stock market opening, until we see what Trump's going to do over
more data
over today or the next couple of days, and until we have a bit more clarity. Did someone blow up? We didn't talk about the market maker angle yet. A lot points to that basically because so much money got removed from Binance. One of the leading theories, so to speak, is that the initial altcoin liquidations specifically targeted quote unquote market makers. If true, this would explain that subsequent liquidity vacuum, because if market makers are forced out, they withdraw from all order books simultaneously, and then exactly what you said, leaving the markets defenseless. So while yes, the market is up and running, and you have enough people saying this is exactly like March 2020, and after that altcoin season immediately ripped, and there was no way for it to recover and for you to get back at a drawdown. Look, if that were the case, I am very happy to buy in at a later price point. But right now, I don't have the certainty to do that. I didn't have it on the weekend. And I know that post in the Telegram chat half jokingly that Mantle ripped, and so did BitTenso, and so did many other things. Ultimately, the only thing I had trust in buying, because that is something that Trump cannot influence that easily, was gold. And quote unquote, luckily for me, gold had depegged on Friday, so I was able to buy quite a bit of gold at 3.7, 3.8K. And I'm very happy to sit out the week in gold stables, and obviously still have my BTC and other spot positions that I have had initially, but I am not in the mood to basically now trade neither buying altcoins nor putting on massively leveraged longs and saying, altcoin season is fully back. This is it. All bad debt is gone. Could be the case. Could also be the case that we'll see a couple bodies surface this week and have more panic. Could also be the case that China and US go back and forth on the tariff threats, although Polymarket at the moment doesn't think that we'll see 100% tariffs November 1st. Not these odds dropped significantly. But all of that is to say that I don't have any trust in the structure of the market right now, especially as everything is up almost double digits. ETH, it's correcting. Now we're going down. ETH is going back to 4.1K, down 1.5% over the last hour. But still, I feel like everyone's getting very anxious towards the opening of the stock market in 1 hour and 15 minutes. And at least we'll wait for that. Probably wait for half the week, the entire week, to have more clarity on what's going on. With that being said, Oxy, you've been waiting patiently with your hand up. Curious to get your thoughts on everything we've been talking about so far.
Yeah, so maybe just speaking specifically to stablecoins. Can you guys hear me okay?
Yeah.
So we were talking about depegging, and so maybe just to preface, so I do proof of reserves for stablecoins in my day job. So what we'll do is go on, make sure that they can, they're backed 100% by redeemable assets that are, equivalent to the minted token. So I don't do work for Athena, but like people were talking about Athena specifically, and I think there's maybe like a misunderstanding as to like what's happening when a depeg actually happens, because so like on their website, Athena has a proof of reserves. They have a real-time proof of reserves where it's like, okay, in real time, do they have 100% backed 1-to-1 US dollars or equivalent to every token minted? And a lot of people were talking like, oh, depeg, like they don't have enough money to like redeem your USDe, like your stables are not worth that $1 that you think they are, or what have you. And in a lot of cases when it's happening like this, it's just the fact that so many people are trying to sell out of the stable to buy something or to change things. They just can't redeem it fast enough. Not that they don't have enough to actively redeem for 1-to-1. So obviously that's not always the case. I mean, we've seen situations where that's not the case, where it's not fully backed, and they literally don't have enough money to redeem 1-to-1. But like in the case of Athena, for instance, I can't read the full report because I'm a U.S. citizen and they kind of block it. But based on what a proof of reserve should be, and if they're 100% backed, they have the money to redeem every token that they've minted 1-to-1, dollar for dollar. It's just the fact that so many people are doing it at the same time. It's hard to liquidate the back end fast enough to fulfill like those orders in real time. Like, for instance, there's a lot of U.S. Treasury backed stable coins. It's not super easy to sell out of those and then get the cash and then sell it and then redeem it to the person who's trying to redeem the token. You know what I mean? So maybe just some clarity there. Like, it's not always the case where like they don't have the money on the back end. It's oftentimes it's too hard to liquidate and then fill those orders in a super crazy event like what happened on Friday.
Yeah, that's a very good point. And on top of that, you have people trading in different liquidity pools. I pulled up exactly that proof of reserve by Athena, which shows 12.6 billion total supply, $12.67 billion in backing. The same story also with Tether's gold with XAUT, the one which I've been trading, where every token is backed by physical gold. It's stored in a secure Swiss vault, but that doesn't matter if you're trading in a liquidity pool, say on hyperliquid USDT and Tether Gold, and you want to sell as much Tether Gold as you can because maybe you need the stable coins to increase your collateral, or you want to buy something else, you will accept slippage. The pool will lose the balance that it had, and obviously the price of gold will move, although not being reflective of quote unquote the real price of gold in the real world, which was not affected by that. And similarly, even though USD depegged on Binance, redemptions, which take way longer, as you said, would still have worked at $1. And maybe let me just tie that in quickly. And I'm gonna go back to you, Brett, with exactly that Binance news, which we also had for the day, which is coming from the blog. Headline being Binance pays $283 million in compensation following Friday's depegs covering user losses, and explaining a couple things that happened there, including the Atom token, which you had mentioned, Brad, saying that existing year-old limit orders for certain tokens, such as Atom, contribute to some heavy altcoin sell-offs on the exchange. It said it compensated users of 3 Binance Earn assets to the tune of $283 million after Friday's volatility. They issued an apology. Again, that is to do with the 3 assets that we covered: USDe, Binance's staked Sol, and wrapped Beacon ETH, which all of them depegged, as we already discussed, to quite the lengthy extent. And they did address this in a separate post, saying that there's going to be changes as a result from that, which will probably not have the time to get into all these technical changes, and also doesn't really matter. The main takeaway here is that they will use those $283 million US dollars to compensate people who were affected by that. Brett, coming back to you also on that depegging discussion, but also more importantly on, because we only have like 8-ish minutes left in the show, on how we are moving forward from that. You said you don't trust the market right now. Is there any specific things that you would be waiting for to want to deploy in the market again or to want to take a directional risk again?
Yeah, as I say that, I actually put on a gold long. Just because it escapes the system. So like, I mean, I'm within wick range because like you said, it went crazy. I honestly think like all this volatility just plays into something that has been the stable thing like for the world the last, millennia. It's we have some concerns obviously with the depegging on chain, like tracking that price. It's very similar to what Oxy was just talking about with USDe, where even if this ticker PAXG is the one that's on Hyperliquid is indicative or symbolizing gold price, it still has the ability to get disjointed from it because of external factors, which is exactly what you did. You took advantage of it. I know we talked about it. You still have that trader instinct in you, so you hop on opportunities like that. I said it. I was the one that said like, oh look, gold is disjointed down to 3,700. Obviously, like gold price didn't disjoint like that in actual real world. So like that was an opportunity that was pretty obvious. And as the world, or as Trump, I would say specifically, is increasingly volatile, I think like this is just going to be more appealing. So I view that as outside of a cataclysmic event that we just saw, it is something fairly safe that is probably going to continue to absorb a lot of capital going forward. So like I'm comfy just sitting in that and letting it. It's not going to do like a 5x from here over the next like 2 weeks, but I would not be surprised to see it continue to just melt up as the world is increasingly volatile and people seek things of stability. So I did that. Yeah, that's my current thing. The things I want to see, I want to see the stock market open, like you said. I want to see like Trump's official formal position on what's going to happen with this little bout with Xi. Right? Everyone's said, oh, it's just going to be a taco thing, which is Trump does these threats and then ultimately goes back on them. It's a nothing burger kind of deal. Yeah, I just want more stability with all of it. And honestly, Meggy mainnet's close. So like maybe I just need to focus on doing that and making sure that's the best thing that it can be and avoid trading for the foreseeable future.
Just because you mentioned that, I'm curious about that from a builder's perspective. Any of the events on Friday impacting your timeline on the release, your internal timeline on the release?
Yeah, we had talked about it. I think the fact that it was over the weekend, like we had the market had time to adjust or digest it. Frankly, it moved one thing. It did not like it, but it's not like a systemic thing. Like everything else, just like business as usual. You can't let that kind of stuff impact you. So no timelines have changed, but one of our announcements got adjusted slightly.
Gotcha. Fair enough. Yeah, to the tariff thing, I mentioned before that there's this poly market that asks the question: 100% tariff in China in effect by November 1st. Not a ton of volume, just 140K, but currently sitting at a 15% chance. So again, maybe says two things: A, the market doesn't know what to make out of that, and B, is not even confident enough to make predictions on it on poly market, because 140K is not a lot of money for typically the tariff markets that we have seen so far. One of the other things that I've been wondering about, and I hope this doesn't come across in a cynical way, is the question if now maybe some people or a lot of people got scared from perps, got good amount of people, good amount of capital got liquidated. If this is not a good amount, if this is not a good period in time to actually farm perps and try to get some volume done again. I think this could be interesting. Obviously, again, a risky game because we don't know what's going to happen, and there is no such thing as conservative perping. There's been like many people on the timeline who said, even the most conservative traders with a 3x long on pump got liquidated, or with a 3x long on fart coin got liquidated. That is not really conservative. It is obviously a risk that you're taking, but still within the confinements that we spoke about, which is a small size of your portfolio allocation. I wonder if now is not a good time to actually get some more volume in on the one hand. On the other hand, and that's another thing that I did over the weekend, was to go to Hyperliquid, to the HLP vault, to the Hyperliquid liquidity vault, and deposit there. People who were deposited saw beautiful returns. It did shoot up to 177% in APY, which basically meant that you would have made significant gains on that even over the weekend. So my thinking there is the unlock period, the withdrawal period, is quite short. It just takes 4 days to unlock that capital. And if there's like a full-on liquidation cascade, if there's second order effects, if someone actually blew up because we said it a couple times. We don't think that this was natural organic market behavior of any sort. Then I'd rather have some capital sitting there as well to capture a potential upside, with the unlock period with 96 hours being still a pretty reasonable one.
Yeah, I think so. We didn't cover the ADL stuff because what you just described for Hyperliquid was the exact opposite for Lighter, right? If people deposited in the Lighter vault, a lot of that capital was used to backstop trades and not force traders into ADLs. So there's this push-pull going on between the two, we'll say right now, like two competing perp dexes. There's a lot of fighting going on the timeline for it. There's Aster's the other one, but with these two specifically, what the proper method is for defending your users and who you should give that money to, right? So on Lighter, the traders did not get ADL'd, which means they did not get stopped out of the positions, which means they could, if they had, a pair trade going, it actually held up and they got their funds, and now the trader is protected. Whereas on Hyperliquid, you get ADL out of your short and then you get liquidated on your long, you're screwed. And all of that money goes to the Hyperliquid vault that you were just describing. So people that had their capital on the exchange to provide liquidity, the backstops to a lot of these markets now is up. So if you're a Lighter person, the incentive to actually deposit capital into Lighter is less there, right? Because you're like, well, what the hell am I doing? If I give you money, you're just going to liquidate me and fund these degenerate gamblers who are trading on the platform. But the traders are happy, right? The traders are like, oh, well, shit, my trade's actually, like, I put on a trade, I should get my value back out of my trade. Like, that's how it should happen. But you have less liquidity now, or potentially less liquidity. Whereas on Hyperliquid, you're like, well, as a trader, the venue is less optimal because you guys are screwing me, frankly, by taking me out of my positions. And you clearly had enough money to backstop it. It should be, the ADL should only be initiated whenever the exchange is insolvent, right? And like, you need to do this to actually like prop up close down the remainder of the actual trades. But they didn't. They had billions or tens of millions of dollars that was then made 100% APY over the course of a day, whatever it was, 24 hours. It was insane, right? It made $40 million over an hour, something like that. So there was clearly money that was there to be
400 mil in there. It made 40 mil. So basically everyone was like up 10-ish%.
Yeah. So like everyone's like, so there's clearly enough money on the exchange. Like, you initiated ADL too soon, and you should have actually like propped up the traders. And so now the traders are feeling attacked. So what the correct arrangement is, like, was it too low for Hyperliquid? Was it too high for Lighter? I don't know. It's probably somewhere in the middle. It needs to be decided on. But yeah, that was the back and forth I saw on the timeline for the ADL specifically. And yeah, you talking about where you want to deposit your funds shows you the outcome of this, right? You don't want to trade on the platform necessarily, but shit, I'll give you guys liquidity if I know you're going to do the jelly thing, which like obviously defended the vault. If you're going to do this, which obviously funded the vault, gave it even more money. Yeah. Hyperliquid goes out of its way to defend the HLP, which is good for passive capital.
Exactly, yeah. And the hype token isn't the insurance there that then gets sold off to pay off these positions, right? Because as you said, like in an ideal case, you have someone's long, someone's short, and as long as everyone's like solvent and the long gets liquidated, the short can get paid off that. But if there's like no more people who are there to be liquidated, then the shorter has no more to gain, and then the auto deleveraging kicks in, or someone else has to step in with external capital to pay the shorter. And you perfectly described it, that Hyperliquid is so very defensive of their HLP vault. And Roomload made the additional comment in the YouTube comment saying that Jelly exploit led to ADL to the auto deleveraging, which makes HLP secure. And then my thinking is
plus their Oracle manipulation, but like that's a secondary thing. Yeah,
that's certainly something we'll also get into. So we can have another whole article on that, but we won't have time for that, unfortunately. But it certainly will be the leading topic for the week on the show. But then again, the question for me has become, what does owning the house mean? Is it owning the hype token and basically waiting on the buybacks and other things like HIP3, which we have coming today? Or I'm also happy to have a more significant amount in the HLP and just bet on things like that, plus orderly market flow and orderly liquidations happening all along the way. And that's something, well, definitely will want to take more time to rethink my portfolio when it comes to that.
Yeah, I think that's a great point. And like at some point, the upside for the hype token becomes less appealing than the stability and the upside from contributing to the HLP, right? So then does it become a little bit vampiric at some point?
Exactly. Yeah. Look, we have talked about quite a lot of things in this show. We have so many more things to get into, but we're unfortunately running out of time. We didn't even have the chance to look into the NFT price action, to look into the Web3 roundup. All of that, the Web3 roundup, is in BCheck's snapshot. If you want to read up on that, on the NFT side, there would be much to say. There's been obviously heavy corrections. There's been a good amount of liquidations and threatened liquidations there as well. But I am pretty certain that, again, this will be the leading topic for the week. But I do want to close out the show at this moment. And thank you, Brett, for co-hosting it with me. Thank you, Oxy, for joining us on stage. I think we'll also focus a lot of our thoughts on how we can move forward in this market and how we can play that in a defensive way, which we already had talked about. But we will also go back to business as usual and include the snapshots to regular shows. There's still other things which are interesting and which are happening today. Again, has been a bit of an exception with everything that has happened. What's not an exception is that this show, as all shows, will get uploaded to YouTube, Spotify, Apple Podcasts, and we're also going to be back tomorrow, same place, 7 a.m. Eastern Time on X, live on YouTube as well, with then hopefully some more news and some more clarity from the stock markets and all other markets. In the meantime, stay safe, have a good Monday, and see you tomorrow.